So everybody knows what happened over the past few days, right? With the Federal Reserve, they just cut their interest rates from about 5.3 to about 4.8. That's half a percentage point. And you might be wondering, what in the world does this have to do with me? Now, whether you're a current homeowner, a potential buyer, or if you're even thinking about, say, like refinancing your current mortgage, it's kind of important to understand what it all means for your mortgage, your home equity that you have, and the overall real estate market in general. So let's break it down so you can make the best financial decisions in the months ahead. Now, just because the Fed cut their rates doesn't really mean that there's a direct impact on regular mortgage rates. The rates on a 30-year and a 15-year fixed mortgage actually follow inflation. And then the overall economy, and in a lot of cases, just the whims of the market, kind of like the stock market. They get a whiff of something, things change, right? In fact, just the hint of a Federal Reserve rate cut or rate increase will actually affect mortgage rates pretty quickly. And then when the Fed rate increase or decrease actually occurs, the mortgage industry has kind of sailed on. So I wouldn't expect a direct correlation simply because the Fed made a move. They've already moved on. Now, if you have a home equity line of credit, or what we call a HELOC, that's a different story. HELOC rates do follow the Fed's actions. So if they cut rates, your HELOC rate will actually drop by the same amount, and that happens almost immediately. Now, looking ahead, mortgage rates are forecasted by our industry leaders to keep dropping throughout 2024 and into 2025. That's great news for buyers. It also means more competition in the market. So according to a recent survey, homeowners with low rates around 3%, they're not willing to sell unless rates hit about 5.5. So 5.5 in the mortgage industry is what we're looking for. That's our magic number. Once we reach that point, I would expect more homes to hit the market, but with more buyers chasing them. All right, and one more thing. While lower rates make refinancing your current mortgage attractive, that surge in refinancing could slow down the closing process for new home buyers. Lenders are already working with fewer processors, underwriters, and attorneys due to downsizing. So those quick 10-day closings that we're used to may become harder to pull off as refinances pick up, right? But here's the good news. Our team always puts our realtor partners and our buyers first. So even as this market gets busier, we're going to make sure your closings stay on track with our lender partners. So if you've got questions about what this really means for you in the long run, reach out. Let's talk about how we can make the most of this market together.